Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 1st of March. RBA stands pat, but maintains an easing bias. Overnight, the RBA kept its key policy rate on hold as it judged there were reasonable prospects for growth. The statement accompanying the decision was largely unchanged from the previous meeting, with the bank reiterating that continued low inflation may afford scope for further easing. Since the data so far provided little evidence that the nation's economy has been hurt by the recent global turmoil, officials are likely to stay on the sidelines until incoming economic data shows otherwise. We will continue to monitor Australia's forthcoming data as a gauge of the bank's future intentions and as the catalyst for the forthcoming direction in Aussie. That said, the focus now turns in Australia's GDP for the fourth quarter, which is set to be released tomorrow. Expectations are for a slowdown, partly due to a decline in Australia's terms of trade. This could cause Aussie dollar to slide back near the 0.71 zone. As for yesterday, Saudi Arabia pledged to work with other major producers to limit oil price fluctuations. The move came after talks between Saudi, Venezuela, Qatar and Russia to freeze output were shot down in flames by Iran's unwillingness to join in. Meanwhile, US shale producers have begun to reduce production, with government data showing that US crude oil output fell for the third consecutive month in December. What is more, individual energy companies are increasingly cutting their budgets, which may lead to even bigger drops in the country's production in coming months. The global oversupply could come down should this be the case going forward, as smaller producers would be pushed out of the market. This could cause oil prices to rebound, but we would like to stay mindful for now as Iran continues to boost its production in order to gain back its market share. As for today's events, we get the final manufacturing PMIs for February from several European countries and the Eurozone as a whole. As usual, the final forecasts are the same as the initial estimates, thus the market reaction on this news is usually limited, unless we have a huge revision from the preliminary figures. The UK manufacturing PMI for February is forecast to decline from the previous month, but to still remain above the 50 line. The uncertainty surrounding the Brexit referendum and the global headwinds may have caused economic activity to slow, which is also visible on the forecast of the service sector PMI due out on Thursday. This could increase the selling pressure on the pound. In the US, it's Super Tuesday, a day of judgment for presidential campaigns, exposing candidates who can't compete on the national stage and instantly propelling others to the nomination. Given that voters in 12 states will head to the polls, it's a chance for the candidates to find out how they are doing, and a chance for a large portion of the American public to finally weigh in on the race. As for the indicators, the final market manufacturing PMI and the ISM manufacturing index, both for February, are due to be released. Usually the market pays more attention to the ISM index, which is expected to have increased but to remain below the crucial 50 level for the fourth consecutive month. This suggests that the sector is still in a downturn. The forecast is supported by the declines in both the Empire State and the Philadelphia Fed manufacturing indices for the same month. Although this could hurt the dollar at the release, we would treat any weakness as a corrective move of the greenback's recent recovery. From Canada, we get the quarterly GDP data for the fourth quarter and the monthly GDP figure for December. The market expects the annualized quarterly rate to have fallen to 0% after surging to 2.3% in the third quarter, while the monthly print is expected to have slowed. Oil prices fell approximately 20% throughout the quarter, which enhances the case for a weak set of data. This could prove cut negative, at least at the release. No speakers are scheduled for today. For more information including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.